Hello, ladies and gentlemen, and a very, very warm welcome today to today's webinar, which is looking at how to maximize SAP automation to enhance P2P, master data, and order-to-cash processes. I'm very, very pleased to be having as today's sponsors and hosts ReadSoft, a company that many of you will be very, very familiar with. So I'd like to extend a very warm welcome to you. My name is Susie West, and I'm introducing ReadSoft today. And for those of you that don't know, I set up sharedserviceslink.com in 2007, specifically to serve the finance and accounting shared services market. At the time, I felt that there wasn't a platform where people could come together and exchange best practice tips on how to get the most out of SAP, for example, to serve their shared services environment. So sharedserviceslink.com serves that purpose by serving as that platform and running webinars such as this one to extend best practice out to the market to help them improve their shared services performance. So let's have a look at the agenda for the next 60 minutes. Many of you are familiar with how this webinar works, but I'm going to just touch on how the session does work, and really just then talk about the intention of this session, and then I'll be introducing our presenters for the day, and then we'll be taking your questions in the last 10 minutes of this webinar. So very briefly, how does this session work? Many of you have joined us before, but for all of those who are new to this particular session and this series that we have, it's a very straightforward platform, but should you have any technical queries, we do have support on the line for you. Please do submit your question via your GoToWebinar box on your GoToWebinar panel, and we will get some assistance to you. Really importantly, SAP is such a major investment for you, and please do use this opportunity to make sure that you get the questions, the answers to the questions that have been nagging you for a while. We do have some great expertise on the line, so do take advantage of that. How that works is you submit the question to me, again, via your question box on your GoToWebinar panel, and then I take that question, I put it to the experts at the end of the session. The sooner you get me the question, the more likely it will be asked. So I do urge you to make sure you push that question through to me nice and early. The intention of this session is very clear. I'm very glad that we've got ReadSoft with us today, because this is a subject that is very much front of mind for the shared services market. We've done analysis after analysis of this market, and really wanting to understand exactly the usage of ERPs within this market. And again, when we do reports on this market and surveys on this market, over 60% of shared services organizations tell us that they are running off SAP, especially within their European operation. So SAP really is the favorite ERP to be used amongst shared services organizations, amongst organizations that have scale of financial transactions in Europe, according to our survey results. And this won't come as a surprise to you. SAP is often considered the biggest investment that finance can make within a generation. It's huge, requiring thousands of man days and tens or sometimes hundreds of millions of pounds worth of investment. So it really is something that needs to be done the right way. And increasingly, shared services organizations are managing the SAP component as a key part of their process excellence and their service deliverables, using SAP in particular as a key part to get them to the success that they're looking for. So the two often go hand in hand, and when a shared services project is taking place, you'll often find that SAP is also part of that shared services project too. So therefore, ensuring optimum use of SAP is absolutely fundamental to the shared services success. So, as I said, very, very pleased to be having ReadSoft here today with us, and I'd like to therefore introduce our first presenter for today, Adam Chapman, who's Marketing Manager at ReadSoft. Over to you, Adam.
Thank you very much, Susie, and hello to everyone. Very pleased to be helping and hosting out the webinar today. So as Susie said, we're going to be looking at how to maximise your SAP automation, get the most from that investment, and how you can enhance your P2P, master data, and O2C processes. So in terms of what we're going to be going through in this session, we will be looking at the typical pains and issues within business processes, within shared service centres, how to overcome those issues with automation, and some examples of best practice. Now, quite rightly, with SAP being such a big investment, the focus here is exactly on that environment within Shared Service Center, and we've broken the presentation down into 3 areas. So we look at P2P, master data, and O2C, so it's nice and easy to follow through. I'm joined on the webinar today by the Managing Director of ReadSoft in the UK, who is Simon Shorthose, and he will be taking us through some case studies and some other examples throughout the webinar. So, straight into business then. There's a lot of issues out there, and we've been looking and analysing the marketplace and seeing what's really driving SAP automation. Well, a lot of you on the line today will be finance managers or shared service center managers, and we know that you're still looking to eliminate inefficiencies in your P2P and O2C processes, and you're looking for better visibility, compliance. Everyone's looking to shorten that cycle time, become more agile versus our competitors, and look for continual improvement in cost reduction. But of course, everyone in the MIS and IT areas will be making sure that that's all done within a SAP certified solution. It's got to fit in with your SAP rollout strategy. It's got to be very simple to administer, upgrade, and have easy user adoption. Finally, of course, right the way across corporate management, it's all about controlling costs, having visibility, auditability. SOX compliance is still very, very high on the agenda. And of course, from your own perspective, more centralization and increased use of SSCs will lead to you being able to satisfy internal and external customers, the customer quality index, the CQI there, much, much better, and drive more business ultimately to yourselves. So at that point, I would just like to hand straight over to Susie for the first poll of the day.
Thank you very much indeed, Adam. So appearing on your screen now, if you could respond to the tick box which is most appropriate to your own situation. What is your specific job function today? Are you in finance management? Are you a finance controller or director? Are you involved in shared services management or directorship? IT manager or director? Procurement or P2P lead? Or are you involved in the operational aspect, so maybe manager or head of AP, sales ordering, logistics, or master data? So we like to get the responses nice and high, which is just shy of 60% voted. If you haven't cast your vote, please do so. And I'll be closing the poll in 3, 2, 1. Let's have a look at the results there. So coming up on your screen, you can see a very strong contingent represented on the webinar today from the operational aspect, and 21% of you very much in shared services management, and 12% from IT. So very interesting, and back to you, Adam.
Thank you very much, Susie. That's very interesting to see, because we've got some fascinating insights into how we can help automate certainly things like the sales orders and so on. So it'll be highly relevant for a lot of people on the call. Okay, so we believe fundamentally in business, there's a couple of processes or a couple of ways of using your processes that people will all have, regardless of the type of vertical that you're in. And that'll be document-based processes or request-based or request-driven processes. Now, if you haven't got these quite right, or they're not fully automated, they're often full of problems that can cause you additional expense or put stops or holds within a process flow for you. So if we look at a document and a flow within a business, there are a number of typical problems. So we've got manual control. There's actually no way of controlling that. It's being done by multiple people all across the organization. People will try and avoid if it's too complex, too difficult to do. I'm sure we've all done it. We've found a way around the system, or we found someone in the know to try and bypass that. And I'm sure a lot of us on the webinar today will be thinking about that. And it gives typical results. So it's slow, it's expensive, it gives low visibility and transparency into what's going on. Compliance is down. It's difficult to administer. And of course, either the department's reputation or the whole organization's reputation can be damaged as a result. Now, with all that in mind, you've then got to think, how do I try and create an effective and efficient organization? And is this really the way I want to do it? Is there a better way of doing this? So, just quickly back to Susie then for a short poll to find out about processes within your SSC.
Thank you very much indeed, Adam. Right, so this is a multiple choice, so you don't just need to tick one of the boxes. Any of the following that apply, please. Which processes do you handle either centrally or within your shared services center or organization? Accounts payable, purchasing, sales of customer orders, accounts receivable, or credit control, or cash allocation, or none of the above, or maybe it's not applicable just yet. So please do respond to the ones which are most appropriate to your own shared services or centrally operated finance organisation. Nearly 75% of you have responded, so very positive. And I'll be closing the poll in 3, 2, 1. Okay, we were on 80% there, so a lot of you shared your responses with us, so that's very positive indeed. And you can see the results coming up now. You can see that there's a clear winner, which might not completely surprise you, with accounts payable. Many people will say that shared services has actually been set up as an enabler to make the AP process much more efficient. So, but you can see the second there is with accounts receivable, and I think that Adam will agree that that's a step change there, with a lot of people having AR within their shared services organisation. So back to you, Adam.
Thank you very much, Susie. Yeah, definitely a step change with AR coming into the equation there, and there's a very, very exciting piece towards the end of the webinar where we'll talk about AR and cash allocation, so keep listening for that. Well, when we talk about automation, regardless of the area of the business that we're in, what do we actually mean by it? Well, automating is not workflow. Workflow is about managing exceptions, and the best way to handle to get efficiency and to lower costs is by not having to handle those exceptions in the first place. And even if you think you have a degree of automation within your business, you often hear a lot of people say, well, we're about 80% automated, for instance. Even that remaining manual percentage can be very unwieldy and expensive to deal with. In fact, Aberdeen Group figures show that laggards have 10 times the cost and 5 times the cycle time than the market leaders within their full P2P processes. So it's definitely worth looking at automation. So in fact, some of the key benefits of automating processes: let's keep costs down, improve that productivity, improve service and visibility across the organization, and maximize that investment in SAP, as Susie was saying right at the front of the webinar. Okay, so the webinar, as we have been saying, is structured into 3 areas. So we have the P2P area, which consists of procurement, purchase rec, AP, delivery note processing, audit trail, and payment approval. There's a master data section within this webinar, and then there's the O2C section, which consists of sales orders, order confirmation, and accounts receivable. Now, we know that there's more areas than this within each of these headings, but these are the ones that we're going to particularly look at automation, where you can get a fast return on investment, and we can certainly help with today. Down the bottom of the screen, you'll see there's 3 little blue pips down there as well: P2P, MD, and O2C. This will help, just for ease of viewing, guide you through the presentation as we go along. Okay, the P2P process then. So right at the front of the P2P process, you've got to start thinking about what is it, and where do we get the most return on investment from? Well, it's about an end-to-end story. It was interesting to see that a lot of people there, the function, you're working within the AP department, and automating your AP, we all know and we're quite familiar about doing this, but it's only going to take you so far. So here's some data that comes from Hackett Group, and you can see the sort of improvement benefits between non-top performers and top performers that you can get by automating AP. But if you add in the P2P full automation, the full end-to-end story, that's how you get the best possible overall result, jumping right way up there to sort of top performance with that 91% benefit, as you can see. So that's absolutely the place that you need to go. Within P2P, we mentioned the different processes that we'll be going through then. So starting off with procurement and purchase requisitions to begin with. And you'll see that within transaction volume, typically, according to Aberdeen Group figures, 70% of the transaction volume will be handled through indirect procurement and purchase recs. And that'll account for around 33% of your total spend. Well, on average, between that 30 and 45% of that indirect purchasing is actually maverick purchasing. So people nipping on the phone because maybe a process is too difficult, it's not automated enough, and people are thinking to themselves, I just need to order, just a box of paper or another bit of office equipment. So they're going off and they're doing something maverick. There's a large savings potential, as you'll see there, when indirect order values are about $120 and processing costs are between 20 and 30. In fact, Steve Tresher, who's the CEO of Integrated Strategies, who is a consulting house that worked with Aberdeen Group on these figures, makes the comments that by not controlling these costs, terms and conditions, you might be leaving between 8 and 15% of your entire indirect spend on the table. But it's about increasing the service quality and reducing that cycle time, which were the key points that we raised right at the start of the webinar as well. So on procurement and purchase recs then, I'd like to hand back to Susie for a quick poll to see how you are controlling yours.
Thank you very much indeed, Adam. appearing on your screen now. How do you control your indirect purchasing today? Do you use mainly SAP EBP or SRM? Do you use a third-party procurement tool, for example, maybe Ariba? Is it mainly manual? This is one choice only. So it's the main way that you control indirect purchasing today. Is it mainly manual? Is it mainly outsourced, or perhaps you don't? So we've got 50% of you who have responded. If you haven't already done so, please do so. How do you mainly control your indirect purchasing today? Through SAP, EBP or SRM? Through third party, for example, Ariba? Manually, outsourced, or maybe you don't. 70% of you voted. Closing the poll in 3, 2, 1. Let's have a look at the results now. So you can see, actually, again, two clear winners. It's mainly through SRM or SAP EBP at 31%, 36% of you manually. Interesting results. Back to you, Adam.
Fascinating. If you look between manually and we don't, there's about 48% of you who could absolutely benefit. So nearly half of us on the webinar today could really benefit from controlling and automating that. That's great news. Great news. Okay. Within this process, then, we look at the typical short view of the manual, how purchase recs maybe are organised today. So those people are doing this manually on the poll there. So purchase recs generated. Of course, you have to notify your procurement team of what you need. The purchase rec is sent up to someone for approval, and then finally, once it's all been signed and arranged, the procurement department will place the order on, and then they'll manually be rekeying SAP purchase orders either over to the vendor or updating the system. Well, in a nice, tidy, automated world, any authorized person, so first you've got the control, where we control who is able to make those purchase requisitions, and it can be done through a nice, easy-to-use intranet-based web catalog. So you're using approved suppliers, you've got the control of cost, negotiation there as well. That automated workflow will go to whoever is required to provide the authorization. Perhaps under a certain value, it doesn't need to go anyone for authorization. And then, of course, once the approved purchase order is generated, it's generated automatically inside SAP, and all of these controls have been sure to be applied across there. So automating procurement and purchase requisitions, some real key benefits. It's very easy to use, so more people are likely to comply and use this. Well, of course, that will increase your negotiation for a basis of a better price in terms and conditions, reduce your costs, and improve the speed of your business, being able to get supplies into your own business. At which point, I would like to hand over to Simon Shorthose, who will talk you through a ReadSoft customer who implemented such a system within their own business. Simon.
Thank you, Adam. Well, good afternoon to those of you in Europe, and probably good morning for those of you further afield. So my name's Simon Shorthose. Yeah, I just want to give you a quick example here of a customer that has deployed our solution in terms of dealing with its indirect procurement angle. This customer has seen a dramatic reduction of over 50% in its indirect procurement costs. The customer is a major manufacturer of industrial pumps, processing thousands of indirect purchase requisitions in SAP every month. And what they've done, they've automated their P2P process, and that included, as Adam sort of mentioned earlier, looking at bringing in a web shop for dealing with things such as office supplies and keeping control of the Maverick purchasing. They have also automated their whole P2P invoice processing and reduced a lot of the queries and interdepartmental problems and questions that come out. And that's very typical for many shared service centers where they're trying to have communication across many departments and potentially countries. And ultimately, they've created a fully automated purchase requisition. And their focus really has been about managing the true exceptions rather than focusing just on the day-to-day tasks. And the real key thing here from their purchasing manager is in the past, they were spending far too much on just typing the orders in and the data and not actually improving and managing the process. Okay, and really as a result of that, they've actually changed their focus onto strengthening the buying relationships and the roles of the various people, and as a result of that, have also achieved better purchasing terms. So here's a nice example of someone who's addressed those indirect procurement, and as Adam said, some 48% of you are not actually taking great control of this at the moment or have a solution around this area. So here's a nice example to bring it to life. So with that, I'd like to hand it back to Adam.
Thanks very much, Simon. Okay, that was a good walkthrough there on procurement and purchase requisitions. Then the next stage within the P2P process that we'd like to look at is delivery note processing. So delivery notes, as I'm sure we're all familiar with, it's about shipment of goods. We use it to match against POs and for creating our GRNs or the SAP MIGOs. Signed copies usually returned back to the sellers as a proof of delivery as well. So Susie, would you like to drop a quick poll in that?
I certainly would. Thank you very much, Adam. So again, appearing on your screen again, how do you link your delivery notes to your SAP transactions today? And again, we're looking for the main way that you do this. Is it automated and very much electronic? Is it hybrid? Some are electronic, but with some manual retrieval. Is it mainly manual paperwork retrieval based on filing by SAP number? Or maybe you don't. So which one of those? Strike a chord with you and represent your current situation. 56% of you voted. If you haven't responded to this, please do so. The more of you that respond, the more meaningful the data that drops out the bottom of it. So up to about 65% of you now. So closing the poll in 3, 2, 1. We were on 69% there, so quite positive. Let's see what those results look like. And you can see on your screen, again, the majority of you, 39% of you using a hybrid approach there. Back to you, Adam.
Thanks very much, Susie. So the hybrid approach is interesting if you're linked to your SAP transaction, which is going to be your main number. But that manual retrieval means you're still going to be incurring a lot of cost with people actually having to go and hunt out archive notes. And certainly for the 24% of people that aren't linking delivery notes to SAP transactions, it can be quite awkward to go back for historical reasons if there was any queries over it. So if we have a little look through the process walkthrough, we'll see how we could address this in an automated system. So manually, the recipient of the delivery notes, it could be a central warehouse, it could be a particular person, whoever's been specified in the PO. And then, of course, we compare that with the delivery, and we transfer it to the purchase, logistics, or accounts payable department, whoever's actually going to be handling the processing of this. The delivery note then is rekeyed and entered into SAP as a good receipts entry and matched against the PO. Now, I'm sure in this particular situation, you can imagine that we've all seen this in our own businesses. People have received this maybe by fax, or it's a copy of a copy, and then there can be transcription errors in the rekeying. So there's a number of things to watch out for here in the manual process. And finally, of course, in many European countries, delivery note documents must be stored for several years to fulfill compliance regulations and legislation. So for those of you, I believe it's 24% of you that weren't linking SAP transactions, to actually then get someone to hunt through old archived material can be also very time-consuming in case of any queries to go with those compliance regulations. In the automated world, then the delivery note is captured as soon as possible as it comes into the business. It's therefore very high-quality material that we're working from. All of the required information is extracted automatically and transferred into SAP, and a copy of that delivery note is stored electronically in an electronic archive so it can be immediately referenced in the future. Then, of course, your warehouse is more concerned about the quantity and the quality. So have we been shipped the right amount of things that we've ordered? Are the boxes in good condition? Are there any problems with the delivery? Are there any other relevant information that I need to concentrate on? For example, hazmat or chemical data sheets, or special storage or movement instructions. Very important stuff about the quality of the items coming into you. In case of any problems about any deviations, workflow can be initiated automatically, and that can be initiated before the GRN is posted, thus nipping any problems in the bud right at the start of the process. And as we mentioned, the electronic archiving makes a fast and simple retrieval, as well as a complete audit trail of all your documentation, increasing your compliancy, mitigating risk. So key benefits within delivery note processing when you automate: lower cost, higher control, reducing manual data entry time, and of course any transcription errors, and one-click retrieval of historic documents from any of your SAP transactions. Now we have a customer within Europe, in fact it's a global customer, who has implemented this, and for that I'd like to hand back over to Simon to take you through some of the details. Simon.
Thank you, Adam. Yeah, I'd like to just talk briefly about SAP, who is, many you will know, it's a major company manufacturer. They've over 15,000 employees selling around in over 100 countries with manufacturing plants on different countries and continents. Now, SAP is a fairly major customer. It's a mature customer, and some of the challenges they faced that they had different sorts of delivery note processes for different sorts of products. So they had both non-stock material and storage material. And for each of those elements, they had different processes or different pieces of information that needed, and different copies of information that needed to go together. And then all of that needed to be kept, obviously, as part of compliance for 5 to 10 years in the archive. So again, whilst the principle of delivery notes can be the same, there was a lot of high volume information here and lots of different pieces of information that needed to be captured for the different processes. So in terms of the solution and post-implementation, in terms of what the results were, they were able to actually fully automate the goods receipts posting. And that's the key objective, because that then gets it into the AP matching process to actually get faster and quicker and higher quality three-way matching as part of the AP process. All the information and associated documents were automatically linked and digitally archived, associated with the delivery notes and the SAP transaction. Also, it was deployed in a way that was easy to use, it was quick, it was stable and flexible, and fully integrated into their SAP environment. And so ultimately, it's about automating the process. The byproduct of that was improving their whole P2P efficiency, and they had all the relevant documents associated together that could actually be made visible through their SAP transactions for any future use. So there's a nice example of a high-volume operation where the delivery notes have been actually captured, managed, and the whole process for creating the GRN into the AP three-way match has actually been automated and improved. I'd like to hand you back to Adam.
Thanks very much, Simon. So the next stage in the P2P process then, I'd like to talk now about accounts payable, which I'm sure a lot of us will be familiar with and have spoken about at length over the years. But it's still quite interesting. If you look at the latest Aberdeen Group figures that came out just last month, nearly still 77% of incoming invoices are paper-based. So it's still maturing, and there's still a lot of potential for what you can do to drive savings to the bottom line of your organization. In fact, if you look at the percentage of people who are investing in automation of invoice receipt and workflow, well, around 64% of people who are ranked best in class are investing within that, whereas on the averages, only around 34–35% of people were investing in that. So, of course, we all want to be best in class. So Aberdeen Group's advice is to pursue comprehensive AP automation, keep driving that continual performance, and even for people who are doing well, there's still a little bit further you could go. And when you go through this process, and people and respondents to their survey who had completed the AP automation reported that their invoice processing costs were 21% lower than other people. They were also scoring more early payment discounts, which we'll come on to talk about in a moment. One of our customers, RS Components, which you'll see based here on the Hackett Group benchmarking that we've done, non-top performers typically had an invoice processing cost of £3.74, top performers at £1.40, and yet RS Components using the ReadSoft solutions were able to get down to as low as 60 pence. So there's a long way that you can go to become even better than best in class. So I mentioned just briefly there about early payment discounts. Well, when we speak about early payment discounts, we can also refer about dynamic discounting. And by taking advantage of either one of these, it's possible to achieve savings, let's say £1 million for every £1 billion that you spend, which sounds a lot, but it's a tenth of 1% of everything that's going through your business. Now, those best-in-class companies that we refer to, such as your RSs of this world, they're achieving approval cycles that are below 10 days, and they're capturing 95% of the discounts that are available to them from their suppliers. That's really, really critical for hitting additional key metrics on your bottom line. But, of course, to hit those deadlines, it needs to be automated. It doesn't need to be in a manual system where potentially you forget about pursuing those discounts aggressively. Next stage in the P2P process is payment approval. Payment approvals are an internal process where invoices to be paid are gathered together. circulated for approval, then the approval is done and the run is made. Have a quick look at the process walkthrough. So manually, these invoices that are posted up for payment in SAP, gathered all together, then of course it has to go into a manual workflow process to be approved. So there could be a lot of documentation, some of it might be based on paper, some of it could be lost, there could be, again, transcription and data errors in there. And then finally, where there's manual transfer of the payment proposal, then to be executed as a payment run, the checks are printed or wire transfers are executed. Automated-wise, well, every proposal can be viewed down to the line item level, so providing a lot more transparency and visibility in the organization. Of course, if you need to see the original invoice, it's available to you electronically. All of the proposals are brought together into a single electronic ledger automatically, and the workflow to gather those approvals is automatically started. And then when it's complete, it's immediately transferred back into SAP for the payment run to be executed. Sorry. The process then fulfills all of the SOX compliancy, and all of your approval business rules that are present will be applied right the way across. So total compliancy within that. So key benefits from automating here: it's going to meet your business requirements, SOX compliancy is fulfilled, the invoice images are easy to see, and it's directly integrated into SAP, so a very user-friendly interface and a high user acceptance as well. So that brings us really towards the end of the P2P process. So at this point we'd like to move on talking about master data management, but we'll talk about it within the perspective of the P2P arena. So Susie, I'll hand over to you for a poll on master data at this point.
Thank you very much indeed, Adam. So how do you create new or one-time master data records today? Do you mainly use an online form? Is it mainly a manual request, mainly an email request, or perhaps something else? So how do you create new or one-time only vendors on your master data today? So mainly online forms, mainly manual requests, or mainly email requests? So if you could tick the box most appropriate to your situation. And we've got 70% of you responded. So let's close that poll down in 3, 2, 1 and have a look at the results. So it's coming up on your screen now. 55% of you are mainly online, mainly doing this online. So interesting response there. But again, you've got 18% very much mainly manual. So back to you, Adam.
Thanks very much, Susie. So looking there at the mainly manual and the mainly email requests, so while they might be email-based requests, there's still going to be rekeying. There's a good 46% of people there where there's going to be additional processing that's going to be required to do this. And of course, the visibility of everything that is either on paper or email isn't there across the whole organization. So let's have a look at the walkthrough for master data then. So typically, when we say manual here, we could be referring to email manual as well as paper-based manual. And to update or create records, of course, those requests have to be sent through to the data owners. And really, we should be looking in any event to make it as complete and as valid as possible. So as much data and as much information should be on that request. Then before these changes can be made, we'll often need an approval from the data owner. And then that request is processed by those data owners, which could be the purchasing or the accounting department, for instance. And then typically master data types that we might be looking at here in the P2P context are things like vendor, GL account, cost center, profit center, that kind of thing. Automated-wise, it's quite similar to what we were talking about having a web shop, actually. You could have a nice web application. You can log all of your requests in one central location. It therefore provides not only ease of user adoption for people that need to do this, but it also provides visibility across the whole of the organization. It gives you then integrated approval routines of any request in line with your established business processes and practices, and it's a single point of processing, that full overview across the entire organization. As a result, the improved reporting that you can get out of this means we can measure service levels. I'm sure we've all had a panic moment. Very often, I've had it in previous companies where we've been desperate to set up a brand new vendor. We've just got something that we need to bring in just quickly. It's a one-time thing, and then you hit that brick wall where someone goes, yeah, it's going to take a couple of weeks to get that sorted out for you. So if we're looking at those service levels and being able to automate, we can avoid those kind of, and typically, we all know this, they're month-end or quarter-end crunches, aren't they? So in terms of master data management, Key benefits from automating and controlling this, making sure it's, like I say, not just if you think you've got email, because it's electronic doesn't mean that it's automated. But the key benefits then, so we reduce all these uncontrolled stuff that's going around either phone, fax, email, manual processes, all collated in one place, better compliance management, shorter processing time, and that improved reporting to drive service level agreements within your organization. So that's master data in a nutshell. Now, of course, master data links back to the P2P process, but also forward in what we're looking at today into the O2C process. It sits quite nicely in the middle. But moving along to have a look at the O2C process, we've broken this down into 3 segments for the purpose of the webinar today. So we have sales orders, order confirmation, and accounts receivable. So to start now with sales orders, just to establish where we're at, I'd like to hand over to Susie for a quick poll.
Thank you very much, Adam. So let's have a look at what level of your sales orders are manually entered today. Is it none, 0%, 1 to 25%, 26 to 50%, 51 to 70%, 75%, or is it indeed over 76% of your sales orders that are manually entered today? Only 43% of you voted. Please do tick the box which is most appropriate to your own situation. I'm sure one of them is appropriate to you. So 55%, if you haven't voted, please do so. Closing the poll in 3, 2, 1. Let's have a look at the results, which are coming up on your screen now. And I think I'm going to pass directly back to you, Adam, for some feedback on those results. Over to you, Adam.
Thanks, Susie. Well, wow. Okay, so a huge, huge level of manual on that. I don't think I really need to say anything else there. I think those results kind of speak for themselves. Okay, so sales orders then, as you'll all be familiar, nice manual internal documents, and it's used for filling the order and a basis for cutting the invoice. Of course, then we translate that back into our own product codes and inventory requirements. So this next process then is going to be so familiar to everyone on this webinar. Your sales order is received into the business. Now this could be by post, it could be a TIFF image, it could be just on email, it could be EDI, it could be PDF. In fact, PDF is one of the biggest growing areas for this kind of sales order. So many, many different formats need to be able to be captured, and then essentially they're all rekeyed into SAP. And I'm sure we've seen this around our business. People are rekeying these things, so they're receiving a fax or they're receiving it by email, and then it's crazy. They're printing it and then sitting there and then typing in what they just printed, which is what's on their screen anyway. Anyway, we get that in. There could be transcription errors in it. That's then shipped down to the warehouse who check the physical stock. Maybe they're reprinting or manually writing out that order and just making sure the stock's there. Then it goes for a manual approval to do with price, discount, any promotional codes that are going on there. The invoice then is created and sent out to the customer, and the order confirmation is manually created at the same time. Again, potential transcription or rekeying errors. Then we go through the fulfillment piece, and then the customer finally receives their order. But if we could eliminate some of those steps and be a little smarter, rather than doing all the reprinting and rekeying, the sales order would still be received in an automated situation from any of those formats. The key fields would be extracted, automatically captured into SAP. That means because we know and we're sure of that data integrity, an automatic stock check can take place. The price and discount and promotional application can all be done through a workflow approvals process that started automatically. That invoice is then created and the order confirmation is created, but again, all automatically in SAP, and ensuring that, again, the correct details and PO numbers and quantities and part codes and SKUs are all in there. That means the right order goes out faster and the customer receives their order faster. So it's about increasing, again, customer service levels. It's about the customer satisfaction. And if a customer is going to receive the goods faster first time and get the right goods first time, they're going to come back and do more business with you, of course. Well, a little quick case study on that. Then we have an international medical device company that we have done exactly this model with. They've got over 75,000 sales orders per year, and they were receiving faxes and then printing those off, sorting through them, putting them into batches, and then eventually, after they've gone through that rigmarole, rekeying all of this into SAP. By automating with us, that workload's now been automatically segregated out by country. It's been done into different batches. There's no transcription errors, and all orders are captured and processed immediately through the system. It's a real step change for them. The next stage within O2C, after sales orders, if we look at it from the other perspective, now if that's looking at it from us sending out sales orders, let's look at order confirmations, and now we're looking at it from the customer perspective. So from this angle, it's an incoming document, and it's confirming back to me the supplier's ability to fulfill the requirements of the PO that I initially sent over to them. So an incoming order confirmation indicates to me that my PO is going to be able to be fulfilled by my supplier, and then we process that order confirmation, usually in the procurement department. And then the delivery note comes back, of course, with the delivery. Any variances are being manually processed and rekeyed into SAP, and rather than having a fully automated system, if there's an issue about discrepancies, I'm having to manually apply credit notes and go through workflows and approvals to do all this as well. So it's very intense and quite top-heavy. Automated, you'll see it's just beautifully simple. The order confirmation data comes in, it's automatically captured, and then the variances are automatically logged and posted back into SAP. No messing around with manual credit notes anymore. So the key benefits here, I guess I've really just sort of summed those up. Reduced order confirmation time, workflows and notification are easily triggered for exception handling. There's no production downtimes because you know exactly what quantity of goods are going to arrive to you and when. So the data quality is much higher as well. And in the event of discrepancies, you've got a guaranteed way of having all the correct information so you can quickly get onto it and handle it. After order confirmation then, we come to accounts receivable. Now, a lot of you indicated in the poll earlier this was an area that you were interested in, and it was certainly something that we see new coming into the shared service center environment. So to take us through our exciting new offering on accounts receivable, I'd like to hand back over to Simon.
Thank you, Adam. Yes, accounts receivable and cash allocation. This is, again, one of those areas that has traditionally, in many companies, gone on in a sort of slow, traditional mechanism. And there has been progress made in a number of areas, particularly in terms of receiving electronic payments. One of the main challenges here that we see is that end of month becomes a major issue, end of quarter, end of year. Ensuring that actually the cash is matched, the cash has come in from a credit control, and it's really that matching of those payments to the outstanding invoices that's critical for actually closing off the books. And this creates a lot of challenges with a lot of people working late nights, overtime, well into the weekends to get the books closed and the various ledgers matched up. And the other challenge that we see on a daily basis is that if you don't have a good, clear cash position of what your debt is, then the credit control staff are not able to chase up as aggressively as they might to make sure that those payments are made. So many times people will say, you haven't paid us, and they say, yes, I have, the check's in the post or the payment was made. So many people don't have a clear position on a timely basis to be able to really drive down their credit control and their DSO to the levels that they'd like to take them. So if we kind of look at a typical cash allocation process, and again, in different countries and parts of the world, there are different challenges between the mixes of paper, checks, remittance statements, and electronic payments. But certainly in a number of major global marketplaces, checks are still very prevalent. So the US, UK, places like France, Australasia, and things like that. So whilst there is a higher degree of electronic payments going on in the market, there's still a huge amount of matching that needs to be done either from remittances, checks, or bank electronic statements. And essentially what we're looking at here is the effort is split across many of these areas. And often in SAP, the auto-matching can be done, but only on a one-to-one level where there is a unique reference. In a sort of more automated way, we're really looking at taking that effort down to some 30% of the overall effort that you had in the initial slide. So essentially, we're bringing in those remittances, we're taking the checks, we're taking the electronic bank statements, we're automatically matching those, we're extracting data where it's appropriate, be it off a check or off a remittance, but it's the auto-matching that's the intelligent part here that is really matching the various options that there are, matching the payments, the debit, the credit notes, and coming up with the ultimate matching at a one-to-one level. This really means that the focus of the people in the cash allocation department is really about focusing on those exceptions and really driving driving those through and making sure that the day-to-day transactions are happening automatically. And then obviously that information is automatically updated into the sales ledger. At this point, I'd like to hand over to Susie, who'll just do a quick poll.
Thank you very much indeed, Simon. So the final poll for this session from me, what level of automation, so no manual matching of payments to open invoices, exists in cash allocations today? So what level of automation exists in cash allocations today? None. 1 to 25%, 26 to 50%, 51 to 75%, or indeed over 76%. So if you could tick the box, most appropriate to you, please. What level of automation exists in cash allocations today? None, 1 to 25%, 26 to 50, 51 to 75, or over 76%. 52% of you have voted. If you could cast your vote, if you do believe that this is very much a relevant question to you, I'll be closing the poll in 3, 2, 1. Let's have a look. Just shy of 60% of you responded. And let's see what we've got on the screen. So 33% of you none, and you can see the rest of the results there. I'd like to pass back to Simon for comment, please.
Okay, thank you, Susie. And I think this reinforces what we see here is this is another area of the financial and the shared service centres that benefit can be driven by providing intelligent business rules within SAP to automate the processes. The base levels are there, but it's really taking it to the next level of financial performance. And really just to move that on, I'd like to kind of talk about a case study which hopefully represents some of the opportunities that there are in this area. And one thing just before we go into this detail is there are big differences between different industries in this area depending on the nature of the number of invoices that are raised and the nature of how payments are made. So there are big differences. But in this case study, we're looking at a customer here who's based in the UK who's doing over 100,000 invoices per month. They have 2 different sales ledgers. They're on a daily basis, they're receiving something like 1,200 electronic payments and also 700 check payments on a daily basis. So a significant amount of transactions that they're having to deal with. The challenges, they had a lot of personnel in this area just in terms of matching the payments to the outstanding invoices. They also had a challenge of it was taking them up to 5 days to actually match those payments to those outstanding invoices. So when we touched on the month end, the quarter end, the year end, some major challenges there with lots of late night pizzas and things like that going on. And essentially deploying the solution, we were actually able to reduce headcount significantly. So 11 people were reduced out of the 15. The unallocated payments were actually reduced to just 10%. We were getting 85 to 90% initial auto match first time rate, and everything was allocated on the same day. In addition, they were able to drive down their DSO by a significant 66%. So overall, really driving down the opportunities and the benefits there. And also, they were able to clear down their allocated cash on a daily basis. They were operating at some 5 to 7 million on a regular basis. They're now operating down at less than 50,000 on a daily basis. So significant improvements in both the process, the speed, and the financial benefits and the DSO benefits. So I'd like to hand you back now to Adam.
Simon, thanks very much. So in summary, what we've talked about across the webinar today, we've looked at the P2P processes, the master data processes, and the order-to-cash processes that you can see on screen there. Of course, the key takeaways from this then is that automation is going to give you an edge. World-class performance comes from automating those end-to-end processes, not just segments of it. It's going to allow you to reduce costs, drive your process compliance and visibility, and you're going to have great end-user ease of use and adoption as well. That's another critical point. Take a common approach to multiple SAP processes, achieve yourself a rapid and ongoing ROI, and you can deploy it in stages, but make sure you go for end-to-end. If you do all of this, SSE, it's going to give you speed, service, and control right the way across your business. So a quick message then about ReadSoft and who we are and how we could help you with this. Well, we're market leaders. It's actually our 20th anniversary year, and we've spent all that time improving the document-driven, as we discussed right at the start, the document-driven workplace. We're based in 17 countries. We've got a great turnover, and we invest a significant amount of that back in R&D and continual product improvement. And we have over 500 SAP customers. Everything we do, we're an SAP partner. It's all SAP certified. We're on the Eco Hub. Everything is going to work just beautiful with your SAP solution. So if you'd like more information, on screen there you'll see our web and our contact details at readsoft.co.uk or email at info-uk@readsoft.co.uk. And at that point, I'd like to say thanks very much and hand back over to Susie.
Thank you very much indeed. Adam, so questions are coming through thick and fast. If you haven't already put your question through to me, please do so. We have got about 7 minutes to put some questions to our experts. So obviously a lot of information covered there. Thank you very much for that, both Simon and Adam. As far as you're concerned, questions coming through on actual kind of typical implementation for such a kind of comprehensive automation program. Can you just walk us through what a typical implementation period would look like and really what the true level of disruption could be to a shared services organization?
Okay, it's Simon here. I'll maybe pick that up. I think what we're talking about here is this is a far quicker implementation than typically you'd be looking at when you're looking at some of the major SAP modules and approaches. The other thing is that the approach that we have for any of these pieces can be deployed in a modular manner. So utilizing the same technology platforms, the same integration with SAP, it can be deployed in a piecemeal manner so that you can actually drive benefits in one area, move it to another, and therefore this is not a massive change to the way that you're operating in processes. So typically you could be looking at deploying a solution module within a sort of 3-month type period, 3 to 4 month type period. If you're going to a full end-to-end process, P2P process, it might be something like 5 to 6 months. So these are really manageable, fairly small chunks in terms of driving benefit across your organization in some of these areas.
Okay, thank you very much for that, Simon. And also, as far as you're seeing kind of cross-industry and also cross-country in your implementations, do you see a different level of adoption of this type of automation from vertical to vertical and country to country, in your opinion?
I think the answer to that is both yes and no, depending on the nature of the organization and its geographic spread. We are seeing many large organizations take a more global approach to their business processes, whether it's purchase to pay, order to cash, or whatever it might be. So at that level, people are looking to have a more common process. Underlying that, the challenges that everyone would recognize are what is a legal or a fiscal requirement that needs adaptation at a country or a regional level. And also, the challenges are more so about changing cultures and practices rather than actually different processes. So people are striving to get common processes, but that you need the agility to be able to deal with some localization, and that's very much the way that we work. But we try and drive towards a standardized approach as possible because that delivers the quickest value, and then challenging really where any changes to that would bring the benefit. So I think certainly different industries, different countries do have changes, but we're seeing a drive to increase standardization, certainly across a regional level.
Okay, good. Another question on implementation. So to make a project like this hugely successful, who are the kind of the key stakeholders that need to be on board within an organization? I
think it depends which areas you're looking at. Obviously, if you're looking at the purchase to pay side, I think one of the well-documented challenges within P2P is ensuring that the financial communities and the procurement communities are aligned with common objectives rather than isolated silos. So I think that's one of the well-documented, and certainly we would advocate a P2P approach rather than just an AP approach, because as we saw with some of the earlier numbers, there is a far greater benefit of doing that. And particularly if you're going to address the indirect spend, it's very important to embrace the user community, procurement, and finance. And one of the challenges here is making it easy for the user to adopt, because it's very easy to write out a common process, but if the users find it too difficult to follow, you're not going to get compliance, and therefore you're not going to get the level of straight-through processing and automation that you want. If you're on the order-to-cash side, obviously at the back end of the process, again, it's financial communities around that. But obviously at the opening end, very much the customer service and the sales side is critical for getting that inbound process right. And obviously flowing through that, you have the IT community, which is critical, ensuring that all the IT elements are actually put in place to support the business as well.
Okay, specifically a question on master data. An issue that comes up again and again that we're very aware of is too many vendors on the master data, and as you've said yourself, there's a lack of compliance with certain organisations allowing anybody to set up a vendor, etc. And obviously this technology helps enforce a compliance and kind of policy following. In your opinion, when people want to move to adopting a technology like this, do you recommend for them to maybe consolidate the vendor master database first and then apply technology, or the other way around?
I think if you're looking strategically, obviously a consolidation of the fundamental causes and any legacy environments is obviously the ideal way to go. But you also have to deal sometimes with a pragmatic ongoing situation of managing it in a better way, even if you're not starting from a perfect position. So I think, if you're looking at your strategic alignment of your master data, that's a big project in its own right. What we're actually talking about here is providing the control and the automation and the visibility of that process, because whilst we saw on the poll that a lot of people have online forms, it's amazing the number of times that they get printed off or attached as an email that's sent to someone else for approval, and the whole control process and visibility of that authorization is lost. And that's really what we're trying to do here, is provide the automation of the process, the visibility, the control. But obviously if you have a bad starting point, you can only improve it so far.
Okay, final question, I'm afraid. Just time for one more, and it really is about the kind of the future of finance automation. Again, at sharedservicelink.com, we're seeing within shared services organisations the scope of transactions increasing quite dramatically, coming into finance shared services, but also just back office shared services generally. A question that I've got coming through is what your view is on where technology and automation is going to be within the next 5 years.
Okay, I'll give a view, and some of the things that you have on your screen there is really touching on some of these things. Certainly to get to world-class, touchless processing is where we want to get to. As we said, workflow is almost an acceptance of failure. However, it's a necessity to actually deal with the exceptions. So actually focusing on improving and dealing with the exceptions in a cost-effective way, I would say, is one of the critical issues. Also bringing things into a common process, because often something like the electronic transactions sit outside of the control of the core P2P or AP process. So being able to have complete visibility of the transaction, whether they come in as EDI, PDF, e-invoicing, paper, that's what we call the hybrid approach, which is I need to manage all of these things in one common process, because shared service centers need to be able to measure and demonstrate their performance across all those transactions, however they come in, and not in isolated silos. So that's about the business process end-to-end, rather than IT versus operations versus whatever it might be. The other thing that we're obviously seeing is e-invoicing, as we said, is part of that mix, but it is only part of the mix. And e-invoicing in isolation, I don't believe, is the answer. PDF mix and paper is certainly part of that mix, and it will always be there. It's how do you handle those in one common process is the challenge. We also see continued growth in shared service centres, not only for AP, as we saw, but for AR. We're also seeing a rapid growth in shared service centres, at a country level, at a European level, and at a global level. So we expect to see shared service centres take on more and more functions and roles. They're far more of a service centre rather than just an internal function, and therefore being able to measure and manage and drive costs down and show greater performance is critical for the future of shared service centres, in my opinion.
Okay, good. Thank you very much indeed. I'm afraid we're out of time. Thank you to Adam Chapman and to Simon Shorthose from ReadSoft. You can see on the screen that we've got a lot of exciting events coming up. In our calendar, we are going to be joined by ReadSoft at the Maximising SAP to Enhance Finance Shared Services Excellence in October, so please do make sure you are there. And do join us for our next webinar taking place 3 p.m. UK time on Tuesday the 21st of June, and we'll be joined by American Express talking about indirect spend. So thank you very much to our presenters today and to you for your time and attention. Look forward to welcoming you next time. Goodbye.